Hey everybody, welcome to my channel. My name is Justin. Thank you so much for joining me today. Today I'll talk about dividend stocks. So this is a monthly dividend series that I do. So I go out to the market, I look at 10,000 companies, and then I whittle it down to the best companies right now that are undervalued according to my metrics that pay at least a 1.5% dividend rate. So we're going to walk through how I find those companies, and then we're going to talk about the companies that I found. So let's jump right into this. And if you guys get some value out of this, please smash the thumbs up button. It really helps out the channel, pushes out to more people. If you like this kind of content, I encourage you to subscribe to the channel. All I do is talk about the stocks and stock market. So let's do this. All right, so the list that you're seeing right now is a list I initially downloaded from the search that I did. So I went out and looked at 10,000 companies like I said, and first I wanted to look at companies that had a really good ROIC. So at least a 10% ROIC per year. That lets me know that management is really good about taking capital, reinvesting in itself, and growing net income overall. I wanted to see companies also have a really solid ROE rating as well. I want to look at companies that had under a 20 PE in the market. I also want to look at companies that had less than a 20 payback time. So essentially companies that you could put money into and you get your money back at least within 20 years. I didn't want to see anything over 20 years. And then I want to see companies that had at least a 1.5% dividend rate on top of that. All right, so out of 10,000 companies, I got about 100 companies in total from that. That list is still too big, so I want to whittle it down from there. So what I did is I went through the 100, and then I basically eliminated anything that was a bank or an insurance company. So the financial metrics I'm going to show you that I use to really whittle down this even further, insurance companies, banks don't really work. You got to look more of like a price to book value. I did a whole video on that just the other day. If you want to go how to understand how to value a bank, check out my video on that. So eliminate insurance companies, eliminated banks. I also want to eliminate any companies that didn't have or showed any earnings growth over the last 10 years. So they had little to no earnings growth, didn't want them on the list. So I took those companies out as well. And I also took out any companies that had a payback time of basically 15 years to 20 years. I want to only look at companies that had less than a 15 payback time. And that, again, that's based on how much money you put into the company, how long it takes for you to get that money back based on their free cash flow. All right, so from there, I was able to whittle it down to, well, let's see, this would be 16 companies. So I started with 10,000, got down to, I think it was 97, and now we're down to the top 16 companies. All right, so the next thing I did is I ranked these companies based on a couple different financial metrics. So what I did is I went to every single company, all 16, and then I found out how much the analyst projected growth over the next 5 years. So for example, this BP Midstream, they said about 4% growth on average for the next 5 years. Based on that, essentially if they had anything that was over a 20% growth rate, they got a 2. If they had anything from like a 10% to a 19%, they got 1 point. Then I looked at PE, and I said, okay, if they had less than a 10 PE, they would get 2 points. If they had a PE between, say, 11 and 14, they got 1 point. And then if they had anything over like a 15 or more, they got 0 points. And then I looked at 4P, it was the same thing. If they had less than 10, it was 2 points. Between 11 and 14, 1 point. Above 15 or more, then they got 0 points. I looked at payback time. So I said, okay, if they had a payback time of less than 6 years, so putting your money in, getting your money back within 6 years, they get 2 points. And then if they had anyone from 7 to 8, they get 1 point. Anything 9 or above, they get 0 points. And then I looked at dividends. So I said, okay, if the company pays more than a 5% dividend, they're going to get 3 points. If they did anywhere from like a 3 to 4% dividend, they get 2 points. If they have between a 2 and a 3, they get 1 point. Anything under 2%, they get 0 points. So then I added all those up, and then I ranked them from there. See, this is how they're ranked. So anything in blue basically were the top ranked companies out of these metrics, and then the greens are kind of like the second tier, and then the purple is the third tier. And so what I did is actually then I looked through all these companies that were in there, and then I tried to figure out which companies actually had a higher intrinsic value for the company based on the current sticker price. So if I determined that they were worth more money now than what their sticker price was, I wanted to bring that to you guys. So I actually found 3 companies in this list. So I'm going to go through how I calculate the intrinsic value, and then I'll show you what that is. And I'm a long-term investor, so when I invest in a company, whether it's dividend stocks or non-dividend stocks, I plan to hold a company 5+ years. But when I buy into a company, I want to get some type of margin of safety. So the 3 companies that I found that had higher intrinsic value than what there are right now, one is Intel. The other one is Huntington Ingalls. And the third one is Big Lots, and we'll go through how I calculate that here in a second. But those are the 3, and these are 3 really solid companies in my personal opinion. I'm not your financial advisor, so do your own due diligence there. I personally own Huntington. I'm really interested in owning Intel as well. So this is how I calculate the intrinsic value of these companies. So we got Big Lots, we got Huntington Ingalls, and then we got Intel. So I basically went out and I looked at the previous 5 years and then looked at what the earnings per share has been or what it's been trending like. I did have to kind of adjust a little bit on some of them. So like Huntington Ingalls, for example, they had a big issue last year on attendance because of the whole Roni situation. So their EPS right now is like 17 trailing 12 months. It should be really between 20 and 25 if it wasn't for the whole Roni issue that we've had. So I went through, could figure out what the EPS was, the growth rates, looked at the P for the last 5 years, and then based on the information, I calculated out what the intrinsic value of each company. So I have Big Lots coming at $86. For intrinsic value, the stock price right now is $68. I was shocked how well run Big Lots is. I was looking at the numbers and it blew my mind how well their ROIC is, their sales, their earnings. Pretty impressive overall. Huntington Ingalls, I came up with an intrinsic value of $290. They're trading at $216. This is one of my bigger positions in my portfolio. Love Huntington Ingalls. They're a manufacturer of warships for the U.S. Navy. The only ones that do that, one of 2 that manufacture submarines. Big Lots, I guess I didn't say what they did. I assume that most people know, but they're a retailer. They basically buy a lot of product really kind of cheap and then kind of pass that savings along to consumers. And then the third company is Intel, and that company most people know. It's a semiconductor chip maker, and I come with an intrinsic value of $62, and right now their price is $55 for their sticker price. So let's take a look at the other spreadsheet real quick. Those are the intrinsic values I have in there. So based on that, really Big Lots, right now they have it's a 1.77% dividend rate. Huntington Ingalls is 2.11%, and then Intel Corporation is a 2.51%. Now I'll just read through real quick the top 16 companies. I won't go into detail what they do, but the first one is BP Midstream Partners, ticker symbol BPM. They're in the oil and gas industry. The next company on the list is Celanese Corporation. I'm not sure if I'm saying that right. They're a chemicals company, ticker symbol CE. The next company that jumped on the list was GlaxoSmithKline. They're a pharmaceutical company. I was shocked to see a pharmaceutical company that made this list, especially having like earnings growth and all the other metrics I had. So very interesting. Ticker symbol is GSK. The next one is Huntsman Corporation. They're also a chemical company. Ticker symbol HUN. And then Big Lots we already talked about. Huntington Ingalls we already talked about. The next one is LCI Industries. They do automotive. They make automotive parts, if I remember correctly. Symbol is LCII. The next one is Sturm, Ruger and Company. They make ammunition and guns. Their ticker symbol is RGR. The next one is Allison Transmission Holdings, also automotive like LCI. These actually, I want to say, is it Chevy or GM they make Allison transmissions for? But I know they do like the big class trucks as well. Ticker symbol ALSN. The next one we talked about, Intel. Next one is Leon's Furniture Limited. They're actually out of Canada. They make furniture, ticker symbol LNF. Next one is Steel Dynamics, ticker symbol STLD. They're a metals company. Next company is Systematics. They're a distributor, ticker symbol SYX. Next company is the Kroger Company. I was actually surprised this one fell on the list. Most people know that company. Food and retail, grocery store, ticker symbol KR. Next one is Penske and Automotive Group. They're a transportation group. You go rent their trucks, kind of like U-Haul. Ticker symbol PAG. And then the last one that showed up on the list is Standard Motor Products. And they make automotive parts. Ticker symbol SMP. And their dividend rates are over here, so if you want to pause the movie and take a look at them, be my guest. But these are really the top 16 companies that I found. The three that I talked about, Big Lots, Honey Ingalls, Intel, I think they actually are trading at a lower multiple than what their intrinsic value is right now. But these other companies are definitely worth digging into. I just started digging into Systematics. The numbers look pretty interesting on that company, to say the least. So that's certainly one I'm looking at. So I enjoy doing these, learning about new companies. I love dividends, obviously loving that passive income that comes in. A lot of times with dividend companies too, they don't have as much volatility as some of the other stocks in the stock market. And a lot of times it's because they may not have a ton of growth going on to the future. So they're just taking the extra free cash flow and then just plugging in to the shareholders through dividends. And one thing to look at too is making sure that companies can pay the dividends. I did look through these companies and it looked like there was enough free cash flow they could do this. Even BPMP, I was shocked. They have almost a 10% dividend rate. They're in the midstream oil and gas business, and they still have enough free cash flow to pay their dividend, surprisingly enough. So that's my list, guys. I'll do this every month. I'd be curious, do you own any of these companies on this list? Are you interested in these companies on the list? I would love to hear from you guys. Let me know if you like these kind of videos or if there's something else you want me to do as far as dividends. I love to hear from you guys. Thank you so much for watching. I really appreciate it. I'll catch you guys on the other side. Take care and God bless.